On June 13, 2025, the world was jolted awake, an ordinary morning shattered by extraordinary news. Across continents, televisions flickered with urgent headlines and social media feeds exploded with speculation and fear. The sense of unease was immediate and palpable as millions tried to make sense of what had just happened. In the early hours, Israel had launched a major and meticulously coordinated airstrike against Iran, targeting a series of high-value military and nuclear sites near Tehran and the critical Natanz facility. The operation, months in the making, was designed to cripple Iran's nuclear ambitions and send a clear message to its leadership. The strike was swift, devastating, and effective. Initial reports spoke of significant destruction and high-ranking Iranian casualties, including senior military officials. For the first time in years, the simmering tensions between these two regional powers had erupted into open conflict, with the world watching in real time. This escalation did not come out of nowhere. For weeks, intelligence agencies in the US and Europe had been warning of an imminent confrontation. Diplomatic channels buzzed with urgent messages, and world leaders scrambled to prevent the worst. Yet despite these efforts, the region was now on the brink. President Trump's high-stakes push for a new nuclear deal with Iran had just collapsed, leaving a diplomatic vacuum. The timing of Israel's strike was no coincidence. It landed just as a critical deadline for negotiations expired, underscoring the fragility of international diplomacy in the face of deep-seated mistrust. In response, the United States moved quickly to protect its citizens, ordering the immediate evacuation of diplomats and military families from embassies across the region. Convoys raced through city streets and military transport planes stood ready on tarmacs, as the world braced for the possibility of swift Iranian retaliation. The attack shattered any remaining hopes for the upcoming nuclear talks. Negotiation rooms stood empty, and diplomats departed with grim faces, knowing that the path to peace had just become far more treacherous. The future of diplomacy was suddenly cast into deep uncertainty. What had long been a shadow war of covert operations and proxy battles was now an open confrontation. The world's attention turned to the Middle East, where the conflict between Israel and Iran threatened to spiral out of control, putting global stability at risk. Years of secret sabotage, cyber attacks, and espionage had finally erupted into overt warfare. The fear now was that this clash could ignite a much wider regional conflict, drawing in neighboring countries and global powers alike. As the world holds its breath, anxious citizens and leaders alike wait to see if this is merely the opening act of a much larger crisis, one that could reshape the balance of power in the Middle East and perhaps the world itself. As news of the Israeli airstrikes broke, the world's attention snapped to the Middle East. Within seconds, headlines flashed across global news networks, and social media feeds erupted with updates and speculation. The sense of uncertainty was immediate, and nowhere was this felt more acutely than in the fast-moving world of cryptocurrency. Crypto markets crashed in real time, reacting to the geopolitical shock with lightning speed. Unlike traditional assets, digital currencies trade around the clock, and the impact was visible almost instantly. Bitcoin, the world's largest cryptocurrency, plunged below $67,000, losing over 4.5% in just a few hours, a massive move for $1 trillion asset. The drop wiped out billions in market value, sending shockwaves through the entire crypto ecosystem. Ethereum, the second largest crypto, fell nearly 10%, erasing billions more in value. The sell-off was swift and relentless, as traders scrambled to limit their losses. Meanwhile, altcoins like Solana suffered even steeper declines, dropping over 11%. The pain was widespread, with nearly every major digital asset flashing red. Panic selling swept the market as investors rushed to cash out amid the chaos. Trading platforms saw a surge in sell orders, and prices tumbled further as fear took hold. The crypto market's 24/7 nature meant there was no pause, no time to catch a breath. Fear spread instantly, triggering a wave of red across all digital assets, from the biggest coins to the smallest tokens. Unlike traditional stock markets, there were no circuit breakers or trading halts to slow the panic. The sell-off continued unchecked with no safety net for investors. The Israeli strike became a real-world stress test for crypto, exposing the market's vulnerability to sudden global shocks. Analysts and investors alike were reminded just how quickly sentiment can turn. In the face of uncertainty, investors sold first and asked questions later, prioritizing safety over speculation. The events of that night underscored the high-stakes, high-speed nature of crypto, and how, in moments of crisis, the market can move faster than ever. The price crash was only the beginning. Leveraged traders faced devastation. Leverage lets traders borrow to amplify bets, but when prices fall, losses multiply fast. Over $1 billion in leveraged crypto positions were liquidated in 24 hours, with $300 million wiped out in just 4 hours. Most of these were long positions, optimistic bets that turned catastrophic. More than 100,000 traders, many retail investors, saw their accounts wiped out. Forced liquidations created a vicious cycle, driving prices even lower and triggering more sell-offs. The event exposed the dangers of excessive leverage in volatile markets. In crypto, fortunes can vanish in minutes when risk is unchecked. The Israeli strike turned over-leveraged optimism into financial ruin overnight. To truly grasp what happened during the crypto crash, it's essential to understand the difference between risk-on and risk-off assets. These terms describe how investors shift their money depending on their confidence in the market and the global environment. Risk-on means investors are willing to take chances, seeking higher returns, while risk-off is all about playing it safe and protecting what they have. Crypto thrives when investors are confident and hungry for returns. Classic risk-on behavior. In these moments, people pour money into assets like stocks, tech companies, and especially cryptocurrencies, hoping for big gains. Optimism and a sense of opportunity drive the market, and riskier assets soar. But in times of crisis, like war or economic uncertainty, investors flee to safety. Government bonds, gold, and stable currencies become the go-to choices. These are considered safe havens, places to park money until the storm passes. The focus shifts from making profits to simply not losing money. The Israeli airstrike triggered a massive risk-off move, as fear of regional war and oil disruption swept markets. Suddenly, the mood changed from optimism to panic, and investors scrambled to protect their wealth. Investors dumped speculative assets like crypto, seeking shelter from the storm. The rush to exit risky positions was swift and brutal, as everyone tried to get out before prices fell even further. The sell-off wasn't about crypto's technology or its long-term potential, it was pure survival instinct. When fear takes over, logic and analysis are often replaced by the urge to escape losses at any cost. Global turmoil instantly kills risk appetite, and crypto is always first on the chopping block. The volatility that makes crypto exciting in good times makes it dangerous in bad times. The market's interconnectedness means distant conflicts can have immediate, devastating effects. What happens in one part of the world can ripple across continents in seconds, impacting every investor. When fear takes over, the only priority is capital preservation. In these moments, protecting your money becomes more important than chasing profits, and that's why risk-off assets suddenly become the stars of the show. The strike's impact rippled beyond crypto, shaking the global energy market. Oil prices surged, with Brent crude jumping $15 to over $75 a barrel, stoking fears of supply disruption. Higher oil means higher costs everywhere: fuel, shipping, goods, fueling inflation worldwide. Central bankers and economists grew anxious as inflation fears mounted. For crypto, this was a double blow. Not only did risk appetite vanish, but inflation fears added more pressure. Bitcoin's reputation as an inflation hedge faded as investors prioritized liquidity and safety. War, soaring oil, and inflation fears created a perfect storm for risk aversion. Investors dumped volatile assets, waiting for stability to return. The energy shock became another reason to exit crypto fast. Surging oil and inflation fears put central banks in a bind. Hopes for lower interest rates and more easy money evaporated overnight. Before the strike, markets expected rate cuts to fuel another crypto rally. Now, with inflation looming, central banks are likely to keep rates high or even raise them. Higher rates mean less cheap money for speculative assets like crypto. The era of abundant liquidity is on hold, if not over. Investors are shifting to safer bets like cash and bonds, leaving crypto under pressure. Central bank decisions in the coming months will shape crypto's fate. Leverage acted as a force multiplier in the crash. Traders borrowed heavily, hoping for big gains, but small price drops wiped out entire accounts. When prices fell, exchanges liquidated positions to recover loans, triggering a cascade of forced selling. Each wave of liquidations pushed prices lower, causing even more liquidations. A domino effect. The result, a rapid, amplified crash far worse than a simple sell-off. The event exposed how leverage can turn a market dip into a disaster. Systemic risk from excessive borrowing makes the entire crypto ecosystem fragile. The Israeli strike showed how quickly external shocks can trigger market-wide chaos. High leverage is a ticking time bomb in volatile markets. Hopes for an alt season, a surge in smaller cryptocurrencies, were dashed. Altcoins thrive on optimism and risk-taking, but the crash drained all speculative energy. Investors fled to safety, abandoning volatile altcoins for Bitcoin or cash. The risk-off mood makes a broad altcoin rally unlikely in the near term. Only a rapid de-escalation in the Middle East could revive risk appetite. For now, altcoins face a tough road, with many analysts predicting continued pressure. The dream of explosive altcoin gains is on hold, replaced by caution and uncertainty. In this volatile environment, what should investors watch? First, monitor the Middle East. Any escalation or de-escalation will drive market sentiment. Second, track oil prices. Rising oil means more inflation and higher rates, which hurt crypto. Third, listen to central banks. Any shift in their stance on inflation or rates will move markets. For now, caution is key. Avoid emotional decisions and beware of high leverage. Volatility is a reminder of crypto's risks and rewards. Stay informed, manage risk, and don't chase quick gains in uncertain times. Watch the conflict, watch the oil, watch the banks. Be careful. In times of global instability, survival, not speculation, comes first.